G'day there, traders and friends around the world. Thank you so much for joining me for this special discussion as at Monday afternoon, the 12th of January 2015. Over the weekend in the pro analysis class, I put up a few hypotheses of what the market could be doing. I'm going to run through those very quickly because as at the close of trading Monday afternoon, I've received a plethora of emails asking for an updated perspective on what I believe the markets are doing. So I'm simply, in this analysis or in this little bit of a YouTube upload, I'm going to walk through some potential signals which are taking place across all three of the US markets. I'm going to use the Dow Jones Industrial Average as the mantle, all right, or as the mantelpiece. So as we have a look at the Dow Jones Industrial Average, we've rallied into a resistance level going back to late November, early December. I'm going to put this as number one. We came back down, we sold off, we retraced, we came back into a logical area of support, which acted as once new resistance. And then again, we have bounced and we've set up a relative high, which is number two. At the moment, or most recently to kickstart 2015, we've pulled back into another area of support. We've bounced, but at the moment, we've set up what appears to be a number three. So we've got number one, number two, and what could potentially be the third relative high. Now, having a look at this and just going through 1, 2, and 3, the first type of analysis or chart pattern, terminal chart pattern, which comes to mind, of course, is the triple top. The triple top is pretty much when we rally into a resistance level 3 times. That comes in at more or less the same level, and then we start to fail. That is what we call a terminal reversal chart pattern. It's what changes a long-term bullish trend, which we've seen across all three of the US markets since the lows in 2009, and is what changes it into what we call a bearish trend. Now, I do believe this is getting a little ahead of ourselves. We've got no confirmation whatsoever, but I'm just painting the picture for you of what could be around the corner. That is essentially scenario number one. Now, scenario number two is what we call the head and shoulders chart topping pattern. Again, they are more or less the exact same thing. The only difference between a triple top and a head and shoulders pattern is that technically the head moves to a higher level relative to the left shoulder and the right shoulder. Now, if you want to get technical and you want to get into the microscopic types of price movements in the markets, then yes, the head and shoulders chart topping pattern, or it could be a terminal reversal pattern, is more relevant on the Dow Jones Industrial Average and also on the S&P and the NASDAQ, rather or instead of that triple top. Now, again, you're pretty much splitting hairs. There's no real difference between the two. It's just simply more so an extreme sentiment shift which occurs during the head and shoulders than what occurs during the triple top. Now, going into the third scenario, we've been speaking about what could be a bear flag, which is pretty much a bounce off from support. It's trying to continue the bullish trend and we failed to the downside. If that's going to be the case, or if that's going to result, we'll see the market continue as at Tuesday or Wednesday, and we should come down and revisit these old support levels. Now, the difference between the terminal reversal chart pattern and also, of course, the bear flag is that the bear flag is not a terminal chart topping pattern. It's more or less just a little consolidation or continuation pattern down into the next support level. At that point in time, we'll see the reversal again and we'll continue in the bullish trend. So when we're speaking about a bear flag, it's more so short term. When we're speaking about macro chart topping reversal patterns, we're talking about the macro chart pattern or the macro trend reversal changing from a bullish trend into a bearish trend. That will be some significant headway if that does occur, and again, the chances of that occurring are quite slim. Generally, when we speak about time frames, we're looking at time frames which set up over at least 3 months. At the moment, if you want to call this the start of the left shoulder or the start of the triple top, yes, it does start in November. Here we are in January. We are pretty much on time for that type of or time frame for that chart pattern to materialize. So I will give that or give you that credit. But having said that, it doesn't look all too structured at the moment. It looks quite messy. It looks quite erratic. It looks quite volatile. So whatever's going on at this period in time across all three of the US markets, it's really not something at the moment that you want to be overly aggressive in. What you'd rather want to do is sit back and cherry pick the nice swing trades once they set up above and below certain types of swings on the overall price chart. Now, having said that, again, I don't want to walk into too much analysis. I've put out 3 scenarios, the triple top, the head and shoulders, also the bear flag. I will put out 2 more very quickly. The fourth, all right, it's just simply we're in a channel moving sideways between support and resistance. That is also very common. That typically resembles a period of consolidation. And the fifth type of pattern, which I don't necessarily like, is that we're in some form of an ascending triangle. You can see that we're oscillating between the resistance, which is still that same relative level. But as you can see, the support is increasing. So you can see that we set up a higher low relative to the low in mid-December. These are all possibilities that we need to juggle as a technical trader. It's not here to sort of dent your confidence in the markets whatsoever. We just need to be able to adapt and move with the price data when we see it on the daily. At the moment, nothing has really changed. We haven't seen any chart patterns break down. All I'm doing again is painting the picture of what could be potential chart patterns, and we will simply trade the sentiment shift at those price points when they either break out to the upside or when they break down to the downside. So I just wanted to run through those very, very quickly. Also speak about one individual stock because a lot of people trade this stock. Apple at the moment, I just see so much nonsense in the world of social media saying buy, 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 buy. If anything, this 3-day pattern here, this is what we call an evening star reversal candlestick pattern. This is extremely bearish, right? It's got very, very severe consequences for short-term price to the downside. So please don't get carried away and say, look, I'm going to buy Apple because it's at a discount. It's trading at 109 and it's been at 119. I mean, that is absolute nonsense. You're going to wipe out your trading account if you do silly things like this. Again, we're pulling into that resistance level, that Fibonacci retracement box. You've made that lower high and you've also made a lower high. So you've got 3 right here. We're in some form of a downtrend. It could be a little bit of a channel. I don't really like trading down channels. They're a little bit messy, but there's no reason whatsoever to be looking at buying Apple if you are a technical trader, if you're a swing trader, even if you're a day trader. You should be looking at this perspective with down, 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 lower prices in the price of Apple short term, or at least moving into the earnings announcement, which is coming out late January. It's actually the 26th of January, which is Australia Day, where I am in the world. So that's one piece of analysis for Apple. Amazon again is on the precipice of breaking down. I've mentioned that stock. Baba today again on the precipice of breaking down. One of my favorite trades is Facebook moving forward. That hasn't done anything as at Monday, the 12th of January. It still looks really good, but we'll have to monitor that. Google's another trade which is on the precipice of absolutely crashing. That is interesting. GoPro breaking down below 62.04. That's been an incredible trade. Tesla today hit our target at 202.41. That was incredible. Twitter had a little bit of a pullback down to our original entry on Friday at 39.52. That looks pretty decent as well. Halliburton is still stuck in that Bollinger Band squeeze. We haven't got that decisive break yet. We soon will. I hope it occurs before earnings. So that's, again, a bit of an update. Thank you so much for your time, ladies and gentlemen around the world. Subscribe to the channel. Have a look at Pro if you're interested. Other than that, have a great Monday evening. All the best. Goodbye.